We have the new numbers for August. I'm going to read out, they really came in kind of as we expected. That monthly increase went 0.2%, which was as expected. That headline number of inflation is 2.5%. Now, we said that expectations were averaging out around 2.6% for this month. I did see some economists thinking it was going to be 2.5% annual rise in all of the consumer prices. So you put in all the baskets of everything that Americans are paying for today, and it is 2.5% more expensive than it was last year. The Fed's target inflation rate is 2%. If I scroll down and take a look at core, came in just as expected, 3.2%. However, that monthly jump of 0.3% is slightly hotter than what was expected. As you're quickly digesting these numbers, Joe, what are you seeing?
So I agree with you. What really jumps out is that higher than expected month over month core CPI at zero point 0.3 rather than zero point 0.2. Everything else was spot on as the market expected. Now that month over month number though is troubling because that suggests that, maybe inflation, month over month obviously is just what happened this month compared to last month. And so it's more real time, it's closer to what's happening right now. And that suggests that, inflation is not steadily coming down as we really want. And the market's reaction to this is interest rates higher, and you see that immediately. And I think that completely seals a 25 basis point cut rather than a 50 basis point cut at the next Fed meeting because inflation is not going down as fast as the market expects. Now, this is really just a small miscalculation, zero point 0.3 rather than zero point 0.2. But at these margins, I think it's enough to make 25 basis point the very overwhelming likely outcome of the next Fed meeting.
Yeah, I would agree with that. It's very slight, but we're looking at a Fed that has been so data dependent. They are going to be looking at that monthly increase on the core level. And the biggest driver of that is going to be shelter. Shelter surprised to the upside last month. It was hotter than expected. And now it's even hotter than it was last month. So, shelter, what it costs to put a roof over your head, went up 0.5% the month of August and is, pacing a 5.2% rise from a year ago. These are high numbers, and it's weighted so heavily in this index. I know that shelter is a lagging indicator. It takes a while for what people are actually paying on the streets to catch up to what we're seeing on our screens. But what's your take on this? It doesn't seem to be a lot of budging when it comes to this area.
Yeah, you're exactly right. So over the past year, past 2 years actually, all the experts have been telling us that shelter is a lagging indicator. It's going to come down. It's going to come down. It's just not happening. I think it's helpful to understand why they think it will come down. So the way that normal people usually when you sign a lease, it's 12 months, right? And so when you sign a lease, let's say the rent goes up, you don't actually renegotiate your lease until 12 months later. And so if the rent goes up, it doesn't really show up until 12 months later. And so what people have been looking at is that the newest leases just signed are not having a lot of increases. And they're saying that these new leases eventually are going to get averaged in. And so the average shelter inflation is going to increase at a lowering rate. Now, I think these people have been consistently wrong because they're missing one of the biggest economic developments that have happened in this country the past couple of years. That is a tremendous increase in migration. So we actually see this happen in Canada and Australia as well. It's a very basic supply and demand. When you have more people in the country, they need to live somewhere, right? And it takes time to build a house. It takes a lot of permits and things like that. So at Canada, looking at Canada, for example, they increased their population by about 3% in 1 year. The same thing in Australia. And what happened when you have millions of people entering the country? Well, there's the amount of housing doesn't really change that much in 1 year. And so their rents went up like a rocket ship. The exact same thing happened in Australia. A lot of people come in, they got to live somewhere. And so, rents go up like a rocket ship. Now, in the US, it's a little bit different because we're a bigger country. We have We have migration, not as much as the other countries, but also migrants are going to different segments of the country. Now, looking at New York City, for example, the vacancy rates are actually the lowest they've ever been because a lot of migrants are going there. And as we all know, it's hard to build housing in these big cities. And so I think one of the reasons why rent has not come down as expected is because our population is growing significantly. And I think that's probably going to keep upward pressure on rents for the foreseeable future, largely depending upon what happens in the November election.
And the things that you're describing are not things that the Fed is going to be able to control with its monetary policy, right?
No, no, no. So a lot of this is partially having a little bit to do with monetary policy in the sense that when you have lower interest rates, it's easier for builders to finance projects, to build more housing. But that's only one part of the picture. When you build a house, you got to have permits, you got to have all sorts of regulatory stuff. That takes a lot of time, and it's largely up to the local government. So, the Fed is part of the picture, but I don't really think it's the biggest part.
And when I, look a little bit more into what the Bureau of Labor Statistics is saying about these numbers, shelter for this round is accounting for 70% of the total 12-month increase in that core CPI number of 3.2%. So when I talk about it being very heavily weighted in this index, this is what I'm talking about. Without the shelter component coming into focus and really, getting less and subduing a bit, we're not going to see that core get closer to the Fed's 2% targets.